From the Aishin Broadcast Studio, it's the Executive Spotlight.
Hey there, welcome to another episode of AutoSuccess's Executive Spotlight. I'm your host, Kyle Alexander, and joining me today is David Jett from Stephens. Hey, David, thanks for coming into Akron to talk to me today.
Absolutely, Kyle. Thanks for having me. I appreciate it.
We were just talking about yourself. Maybe kind of explain to the viewers watching this what you do with Stephens. What's your role, what's your title, and what is your job responsibility?
Yeah, absolutely. So Stephens is a family-owned investment bank. I joined the firm pretty recently, but cover the automotive aftermarket. So, in a nutshell, that means any business that's a service business, a distribution business, product business. We have a really notable dealership team. I partner with them on transactions as well. And so if you're a business owner, you can be a family owner, you can be a private equity owner, you could be a public company. Our role is to help you think through transactions. It can be a financing, an equity offering, traditional M&A assignment where you're selling your company or maybe you're buying another one. Sure. You would hire us to come in and help you work through that process. That's where we add value to our clients.
Awesome. We're kind of talking about the industry as a whole today. First question I kind of want to talk about, average age of vehicles on American roads is going up more and more, every year. Why do you think that's one of the biggest tailwinds for the automotive aftermarket and auto dealers today?
Yeah, for sure. I think I'm going to focus on the aftermarket as the starting point. So, sure. For most individuals who are out there and they're coming to this point in their vehicle ownership life cycle of, do I maintain the vehicle that I currently have, or do I go and buy a new vehicle? Some trends that we've had post-COVID, right? There's been a large uptick in the price of vehicles.
Oh, absolutely.
From an MSRP perspective.
Mm-hmm.
There's certainly been inflation on parts as well. But I think if you net those factors against one another, and then you think about financing costs as well, the buy decision is a lot more expensive today than it really ever has been. And so a lot of consumers are holding on to their cars because, well, if I have to pay 10% more to fix a part, whether it's tariff impacted or just inflation impacted, that's probably less than if I have to, shell out for a new vehicle at the high MSRPs that are being seen in today's market. And I would say on top of that too, with financing costs and rates going up to where they are, that adds an incremental layer.
Oh, for sure.
A couple of years ago, you might have had anywhere from $3,000 to $5,000, and you could have said to yourself, well, I can put that towards a down payment and get a new vehicle that I'm now, financing or leasing. And, today the math doesn't really work anymore, right? So you may say, well, instead of putting that money towards a new vehicle, I can put that back into a repair order. And we've seen that across the aftermarket, that a lot of repair tickets have been much higher repair tickets than what you would have seen in the past. Like a, $3,000 repair ticket was almost unheard of 10 years ago. And today, a lot of folks who are operators in the aftermarket repair sector are seeing tickets like that, and consumers are regularly signing up to get fixes that are in that ballpark.
Let's kind of keep going down that path, where you have more consumers choosing to repair their vehicles and instead of buying new cars. What's kind of driving that shift, and do you expect that shift to continue?
Yeah. Look, I think in the near term, it's certainly going to continue. And I think it goes back to what we just talked about. It's,
right.
The cost of new vehicles, it just keeps going up, new technologies. We talked about tariffs a minute ago. And so I think that, consumers certainly are going to look at themselves, look at their budgets and say, okay, well, what's the most practical course of action for me? We've also had gas prices go up. Hopefully that steadies a little bit here in the nearer term. But that's just another factor as consumers think about their wallets and, where they're going to be able to allocate funds, going forward.
With these rising gas prices and whatnot, electric vehicles have been a pretty hot topic of discussion over the past few years. How do you see EV adoption changing the aftermarket, and what expectations are kind of ahead of reality at this point? Are there any expectations ahead of reality when it comes to EVs?
Yeah, I think 3 or 4, maybe 5 years ago, expectations were very high for this electric vehicle adoption. It's a really exciting technology, and when you think about the performance attributes that the electrical car has relative to a pure, ICE engine vehicle.
For sure.
I mean, the torque is unbelievable.
Oh,
and
it's amazing.
The acceleration, it's crazy, right? I mean, there's some
feel it.
performance metrics that were unheard of,
Yeah.
and frankly hard to duplicate or replicate, even in some of the highest end performance cars that are out there. But there are some limitations, and I think a lot of the limitations have essentially prevented it from being widespread. One is expense, like we talked about. Two, infrastructure for charging. Three, and this might even be the biggest issue, is the range anxiety that a lot of consumers have. I can't take a 5-hour road trip with confidence necessarily. Maybe,
Sure.
right? Maybe I can plan it out, but there certainly have been stories of individuals who have tried to take long road trips and run into some issues with, maybe
Right.
a charger didn't work that they were banking on, and
Yeah.
all of
they're
a
stuck
sudden
somewhere.
now you're stuck, right? So that's not a great solution. And I think that ultimately, in today's market, where a lot of consumers are shifting, if they are interested in the EV adoption, is a hybrid actually is a very good compromise. You have the gas engine, you have the battery power, you can mix and match. You're not going to the pump as much, and you still have some of those drivetrain characteristics that come with the batteries. Those are more complicated cars. A lot more
Absolutely.
parts. I mean, it's two different drivetrains. And so I think, as time goes on, the repair costs on those could be a bit higher, but I think over the longer term here, there's still going to be a segment of the market that really likes pure battery cars. If the technology continues to improve and range gets better, they could be more easily adopted. I think in the nearer term, the hybrid is a good solution. There's still folks out there that like ICE engines, and those have proven to be very reliable for a very long time. I was doing some research the other day on long-range EV models where it's effectively a battery-powered car, but it has an engine in it.
Okay.
The sole purpose of the engine is to recharge the battery.
Right.
So
Yeah.
that could be an interesting trend that we see. And if you have that set up, it's probably a smaller engine than if it's a hybrid. And it's not like that engine's actually driving any of the vehicle. It's just there to recharge the battery. So from a parts and simplicity perspective, that would actually be, I think, a much simpler car. Could address some of the issues that we have on the infrastructure and the range side. So overall, I think we're going to continue to see new technologies that emerge. ICE engines are going to be here for a long time is my current view. I think there's a lot, certainly with light vehicles and commercial vehicles, that are going to be hard to replicate. And we talked about average vehicle age. The average car on the road's close to 13 years. So, I mean, all of those cars have to cycle through in addition to new car sales before we see a huge turnover. So I think it'll certainly shift more and more towards some of these hybrid and electric-oriented options. But ICE engines will be around for a bit, for sure.
Good insight there. Very interesting stuff. Want to touch on something that we were talking about in one of the last couple questions here. The economic uncertainty kind of going throughout America right now. Despite that, automotive service businesses are pretty resilient through it all.
Yep.
What makes the aftermarket such a defensive industry, even amidst all of the economic uncertainty?
Yeah. You have to repair your car. At the end of the day, you can defer your maintenance for a period of time.
Sure.
But there comes a day where you need that new tire or
Right.
tires.
Oh, yeah.
Your car's not going anywhere, right? So problematic if you can't get in your car and drive to work. And look, the majority of the country, people do rely on their cars to go places. There are certainly certain hubs where you can fully rely on public transportation and may not need to own a car, but I'd say the majority of the country, you need a car to get from point A to point B, right?
Yeah.
And so I think the aftermarket has been very resilient because there's a lot of cars out there. The ones that were built 10 years ago were built better than they were built 20 years ago, which were built better than they were built 30 years ago. And
Right.
as that trend has gone on, you've seen that a lot of the vehicles that were more recently built have better longevity. And, so they're 100,000 miles, you're not worried about it.
Right.
Still functioning very well. So, okay, again, it's all-time highs in terms of MSRPs for new cars. Financing's very expensive. I just hit 100,000 miles, but I have a 5-year-old car. I'm good with that.
Yeah.
Keep it
It'll
going.
Keep going. Yeah.
You got to keep it going, right? So just keep doing your intervals on maintenance and getting your oil changes, new brakes, new tires when you need it. But, and again, you can defer it. And in some cases, we've seen customers, shift down into lower tier packages over time, but you can't totally walk away from it.
Sure.
And so at the end of the day, it's a deferrable service, but it's certainly non-discretionary. It's one that you have to do in order to keep things moving.
Right. And, flip side of the coin here, as resilient as automotive service business is, it is still pretty fragmented, I
Yep.
would say. Why does that create a good opportunity maybe for consolidation and M&A in this business?
Look, it's highly fragmented today. You got a bunch of players that today have grown and have a significant number of units. But the reason that they have, I think, had this level of success is as technological changes have come into these various vehicles, you have a lot of smaller businesses where the way they do business today really should change relative to 20 or 30 years ago.
Right.
It's harder for someone like me or you to fix our car in a DIY format.
Mm-hmm.
But likewise, DIFM, there's new things you have to learn as a mechanic, right? To fix a vehicle.
Absolutely. Yeah.
And so ultimately, if you have a small store, you may not have the desire necessarily to invest in some of the new technologies and training that you would need in order to train up your technicians so that they can appropriately address some of the vehicles. Certainly, as you gain size and scale, you have purchasing benefits that accrue to you as an organization now that you're going to maybe one distribution partner, but you're buying a lot more from them, or maybe it's on the tire side, right? You're buying a lot more from them. And so I think ultimately where this goes and why there's an interesting opportunity for investors to come in and try to create bigger platforms is, you're going to be able to unleash the power of the scale of that platform as it gets bigger. And you're going to be able to find units and stores and little regional groupings of businesses that really would benefit from being in the bigger platform. They can do things more efficiently. They can get training to get their technicians up to speed on some of the newer technologies like pure battery cars. It's typically more efficient, right, to spread that across a big organization. And they have the resources to do it. And I think for a lot of the more smaller, players that are out there, it's harder for them to compete, in that sort of a setting. So it lends itself nicely to having a bigger player come in and acquire their business and, help take them to the next level.
Let's build on the technology aspect a little bit here. I mean, technology is changing vehicles. It almost feels like every day. It's faster than ever. How does that create opportunities and not just challenges for, service providers, part manufacturers, et cetera, in, the aftermarket space?
Yeah. Well, it's a competitive market out there.
Yeah.
And I think ultimately everyone's trying to cater to the consumer. So can we create a vehicle that a consumer wants? And can we create an experience owning that vehicle that they like? And so I think, again, as the technology in these vehicles changes and the way that, you fix these vehicles changes, the way that you as a customer interact with the OEM on owning the vehicle. Like, do you have an app for your car where you can actually monitor your vehicle and understand the status of that vehicle? And ultimately, that to me comes back to service. How do you take the new technologies that are in these vehicles and implement it in such a way that service providers can really stand out? How much more would I like as a consumer for my service provider to proactively notify me that, hey, X, Y, and Z doesn't look great in your car, and you need to come in today, and maybe they throw a little kicker in there. If you come in the next day or two, like, we'll give you 20% off, but we think it's in your benefit to come in, and here's why.
Sure.
So I think that there's really interesting ways for companies out there, whether it's OEMs, dealerships, aftermarket service providers, to try to engage with customers more, because customers are increasingly technology savvy,
right?
But their cars are too, and their cars are connected to the internet, phone apps. I mean, there's a lot more data that's flowing through them now.
Oh, yeah.
Right? And so I think there's a lot of ways that if I'm a service provider or a dealer, I want to try to interact with the customer more. I want to understand more about what they want and how can I make the experience better for them. And I think it comes down to service, proactivity, communication, and ultimately the technological changes that we're seeing are allowing, for much more of this interaction to occur and trust to be built up. And that creates a lot of opportunities.
For sure. And I mean, technology is only going to continue to grow as we move ahead in the future here. In that sort of space, looking ahead maybe the next, 5 years or so, what trends do you believe will have the biggest impact on the automotive aftermarket industry?
Yeah, it's a great question. And, something I've been following more recently is some of the building in China that's happening in terms of the manufacturers, right, over there. And of course, in the U.S., we don't have, Chinese vehicles sold yet. I think people all feel like at some point there's going to be a way for them to come here. And you look at, the build cost for those vehicles, you'll get quality. The cost from everything that I've understood is very competitive. The quality is very good for a lot of the vehicles as well. How do the big established players, both in the U.S. and in Europe, how do they compete? Right, with some of those new vehicles that are coming online, and is the government going to try to step in and manage their inflow, if you will, and allow some of the other more established firms to try to catch up in some ways? So I think that's something that's going to be really interesting as we think about the near term. I think also we've talked about EVs. How does that continue to change? Because again, 5 years ago, everyone thought the shift would be very noticeable, and people would be focused on buying EVs for their next vehicles, and that didn't quite happen for some reasons that we've already identified. But are there technological advances there that actually reduce the barriers, and that actually picks up more? We've talked about hybrids. I think that'll continue to be a theme that we see. And overall cost of vehicle ownership, cost of insurance. These are some things that don't appear to reverse, in any scenario that we can look out and foresee. So how do consumers continue to, look at the cost of owning a car, and how do they balance that, right, against, again, their budgets and their own individual family needs? But I think people will certainly find a way. Vehicles are so important to all of us. So I think the future is certainly bright, but the opportunities to me are going to come from some of these trends and, various market players who are able to adapt to some of these trends.
Well, let's talk a little bit about, the value of an automotive service business. In your eyes, David, what operational characteristics make one automotive aftermarket business more valuable than another?
Yeah. To me, it comes down to, are you able to attract customers and then retain them?
Sure.
Because at the forefront, if you're able to do that, all of your other metrics, financial or otherwise, are going to look great.
Yeah.
Right?
Fall into place, kind of.
They fall into place. So I think it comes down to, how do you connect with your customer, and how do you keep them coming back to you? So I feel like the majority that I've seen where they really execute well have certain ways of marketing to customers, engaging with customers. When the customer arrives, they feel welcomed. The service is obviously has to be top quality. But look, even if you have seen a customer a number of times and they trust you and they feel good about the service you're providing, and you happen to have a hiccup one time, they're still going to be a loyal customer to you. If you've been going there for years or multiple times. And again, it comes back to that experience and feeling, the trust that you can get. And I'd say, something that's unique about this industry, it's a consumer-driven industry, and in some ways you could think about it like a restaurant, because it's a four-wall service. People are coming to it, but it's different because it's hyper-local, right? This is a hyper-local service where I'm not driving 6 hours to get my car serviced.
Yeah,
I'm driving like within 2 miles, and it's very much a trust-based business. Outside of quick lube or car wash, which I think you could say are certainly more on the convenience spectrum.
Right.
Other ones that you're going to take your vehicle to are going to be, you trust that the manager at that store is giving you good advice, and if you're going to pay a $3,000 ticket, it's needed, right? And they told you it was needed, and you believe them. And for good reason. It's because the last 3 to 5 years, or however long it's been, they've consistently given you good advice. And you remember that time 2 or 3 years ago where you showed up and they said, actually, you don't need that today. Here's what you do need. And ultimately that drives loyalty and repeat customers. And I might word of mouth tell my friends and family about it who live in the area. There's your car count going up, right?
Sure.
Over time, if they feel like they need to increase labor rates or whatever it is to, stay competitive and make sure that they're giving their technicians a good lifestyle, they can do that because, again, hey, look, I trust that they're giving me the right level of service, and as a consumer, I'm willing to pay for the experience. So to me, it's all about the experience, and I think the best operators are ones who can drive really good experience, drive really good customer loyalty, keep the retention high, and that creates really good lifetime value.
Kind of speaking even into that lifetime value just a little bit here, from your seat at Stephens, David, what long-term industry trends continue to make the automotive aftermarket, an attractive investment sector for people looking to invest in this business?
Yeah. Well, the technology that we've talked about causes a lot of need for change. There's a lot of family and founder-owned businesses that, I think as they get into the second and third generation, those family founders may look out there and say, this has been a great business for us, but we're ready to move on, move into something else.
Sure.
And part of that might be driven by technology and their ability to adapt or not. And they may say, this has been a good run. We don't feel like it's, we're the best stewards of the business going forward. We see changes on the horizon that we don't feel super well equipped to manage. And for that reason, we think it would be good for ourselves to sell the business, right? And so then I think that creates a really good opportunity. And like we talked about, the bigger the scale in this aftermarket, typically you do find value that accrues to you just through purchasing volume, disseminating the training across a huge platform, best practices and learning that can be shared across your footprint. So I think those are some trends certainly that would continue to lead to really robust opportunity going forward for investors.
You started touching on the family office in this space too. Obviously, private equity is very active in the automotive aftermarket right now, but these family offices, kind of like we were just talking about, are still involved,
Yeah.
How are family offices approaching opportunities in the space, and how does their investment philosophy differ from private equity?
Yeah, so the key distinction is that it's a family that
Sure.
Has done very well and perhaps owned a business of their own and sold it, and so then they have capital that they're looking to deploy, right? They want to manage their own investments and protect their family legacy, and they want to do it in a productive way. And look, if they built a great business that they sold, they have some expertise in running businesses, so
Right.
typically they say to themselves, well, this is great. How do we diversify, this really nice sum that we have, and can we find some other businesses and then have an impact in the same way that we did in the first business that we sold, to get to this position. And so I think a lot of them, when they look out at the marketplace for where they can deploy their funds, the automotive space tends to be an attractive area for them. I think a lot of them understand the automotive aftermarket. They like the trends. They like the fact that it's non-discretionary. They like the fact that there is a good thesis around, if I start acquiring, one business, there's a lot of other M&A opportunity, and I can, again, influence this bigger organization as it grows over time, and we can push through, the value that we create through scale across the whole organization. They really like all of that. I think the key difference between them and private equity tends to be, again, it's the family has their own pool of money.
Sure.
It's not a fund that was raised that has a time cycle on it where it needs to be returned at any given point. Families can go in and buy a business and hold it in perpetuity if they want.
Right.
Right. There's no time clock on it, and so they have flexibility. And I think they look at some of these businesses, and again, a lot of them are founder family owned, and they say, hey, we were in that position too, and we feel confident that if we're talking to a founder family owner, we understand their position, they understand our position, we can connect with them really well. And so therefore, that's typically been a way for them to come in and find really good transactions. I would say that we typically see them less frequently in auction processes, get really aggressive, but I think it's because their bread and butter is to try to find other families and try to work deals in a one-off way and say, hey, look, we sold our business a number of years ago. We'd love to help you with this transition. And we can be really flexible with your transition, over time. And so they can come up with some structures that are interesting and creative. They typically have access to some of the same resources that private equity does, whether it's, really high-end executives that they may have crossed paths with historically, or they may have lending or other financial institution relationships that can be used to really drive value. But usually they can bring those resources to bear through their investments the same way that private equity can. But I think having that family feel, it just creates a little bit of a different cultural dynamic. And it
Sure.
depends on, if you're the seller, it depends what you're looking for. It depends if you're trying to maximize value and do a very competitive auction, or if you may want to do something one-off. I think you'd see more family offices doing the one-off deals. They'll participate in auctions, but typically private equity or strategic firms move a little bit more quickly and tend to outcompete when it's a big pool of prospective investors or buyers.
Awesome. Lots of great insight for viewers to unpack here. David, thank you so much for joining me on
Yeah,
AutoSuccess
for sure.
Executive Spotlight today.
Absolutely. Thank you, Kyle.
And
Yeah,
thank you
appreciate
for
it.
watching. We'll see you next time.